On Wall Street, just like about everywhere else, it's a waiting game, waiting for confirmation that the U.S. and its allies are nearing a decision on staging a military strike against Syria. That fear, of course, sent the markets into a tailspin on Tuesday. Today, a different story, though. Stocks ended higher. That after traders heard no further saber rattling about Syria and after a surge in oil prices that actually helped lift energy stocks today. The Dow ended higher after 3 straight losing sessions. It finished up 48 points. The Nasdaq was up 14. The S&P added 4. Crude oil up another $1.09 a barrel, closing at a more than 2-month high now. It's first settled above $110 a barrel since May of 2011, and that helped the entire energy sector. And it sent shares of Dow components ExxonMobil and Chevron each up more than 2%.
Now, even though oil prices spiked higher on concerns about Syria, prices at the pump here at home are holding steady so far this week. But that could change. Hampton Pearson explains.
As millions of Americans get ready to hit the road for the long Labor Day holiday weekend, gasoline prices at $3.55 a gallon on average nationwide are down about 8 cents a gallon from a month ago. But oil industry analysts say possible military strikes against Syria could be a game changer, with some predicting a 10 cents a gallon spike in prices at the pump in early September.
It's very likely, if there is a military attack in Syria, that we'll see the highest prices we've seen since 2008.
In the summer of 2008, crude oil topped $147 a barrel and gasoline prices went over $4 a gallon. By October, both figures had been cut in half. What's different this time is that oil prices began rising before the standoff in Syria, back in July, when tensions in Egypt began raising concerns about supply disruptions through the Suez Canal.
What I think we're going to have is the fear of supply interruption, which is going to get the futures to rally. And what it might also do is prevent ships from being insured. Can't have the ships insured. Now all of a sudden, you can't have the shipping of crude oil across like the Suez Canal.
But unless and until there are attacks and reactions, figuring out the price of crude oil or gas at the pump will keep market watchers on edge.
I think you want to position for a big pullback here because the economy in the U.S. seems to be slowing. Some of the production issues should resolve themselves later in the year. There's a great argument for the price coming back down, I think, as rapidly as it may go up here.
For Nightly Business Report, I'm Hampton Pearson in Washington.